Hey everyone, me Kevin here. Here's what Jerome Powell just said in complete summary. First question came out with inflation. We expect inflation to rise over 2%. Jerome Powell expects to see upward pricing pressure from a rebound in spending, especially if supply chain issues continue to limit companies' ability to respond to that new demand. Expects that these one-time impacts to pricing will be transitory. That's the big theme. That's really been the theme the last few months, that folks, this is not going to stay. This inflation is not here to stay. In fact, Jerome goes deep on his inflation argument in just a moment, which, of course, I will summarize. Jerome Powell also believes that rather than trying to predict exactly what inflation is going to do, let's just wait and see what inflation is going to do and then react. That means, as usual, we're pretty much expecting to wait until October, September, so that way we get the base effects behind us and we give some time for supply chain issues to start solving themselves. So, and this is my opinion, but to me, I don't think there's any way the Fed can have outcome-based guidance until we actually start having outcomes, which we won't start seeing until August, September, October. So then we get into, is it time to start talking about tapering bond purchases yet? This question was asked many different times in many different directions. We even had it asked in reverse, and the answer was consistently a resounding no. That Jerome Powell will tell us well in advance of when it's time to taper, that he will make it extremely clear to America that we are getting ready to taper, and that he's waiting for substantial further progress in the economic recovery. Today, he gave a really cool definition of substantial further progress, by the way, and he kind of did it as an implication. He's like, look, we are 8.5 million jobs down from where we were before, and we're growing at a faster rate now than where we were before. So that, by the way, is borrowing from the IMF and the World Bank, because they said that the growth of America is on this sort of growth trajectory, and the COVID pandemic put that sort of V-shaped into that trajectory. But because of all the spending that's been done, we're not on that same course anymore. We're actually growing at a faster rate, so higher angle of faster rate than we were before the pandemic. And Jerome Powell's going, look, we're growing faster than ever before, and we're still missing 8.5 million jobs. You think that's close to substantial further progress? It ain't even freaking close. Well, you just stop asking me the freaking question. We ain't close. And so this has kind of been a theme of what Jerome Powell has been saying. And it's interesting to hear him argue that essentially the unemployment number is a very big piece of this puzzle. We'll keep going. He was asked about herd immunity, but obviously he's not Dr. Fauci, so he didn't have an answer for us on that. Then, what if inflation expectations were to go up once we get to a full employment? And so Jerome Powell breaks this into two parts. He says, here's the thing. It's unlikely that inflation is going to move up persistently so that inflation expectations end up going up as long as there's still slack in the labor market. So this is where he's literally tying together what I just said about substantial further progress being when we get all those jobs again, especially since we're growing at a faster rate. He's saying, look, it's really unlikely that we're going to see inflation over like year over year over year when there's so many jobs that still need to be filled, when we still have so much unemployment. It's very unlikely, he says, that we'll see inflation and inflation expectations go up. Keep in mind, inflation is actual prices going up. Inflation, perceptions or expectations, rather, are what we think prices will do in the future. And both of those are very important independently. So he believes that first thing first, we got to get to full employment first. Then we probably can evaluate, are we going to start seeing this consistent inflation? Now, he did say that he'd potentially be open to tapering before we get to this full employment level and before we sort of are able to evaluate exactly what's going on in inflation. So the first thing that will happen is definitely that tapering. He will tell us well in advance of that taper, but a lot of expectations are that we'll start seeing a taper sometime towards the end of this year, maybe beginning of 2022, and then rates to increase 12 to 18 months thereafter. What about if the pandemic reversed course? And this was really interesting because this is where Jerome Powell brought up something we haven't really heard of before. He said, look, there's a very real possibility that we're going to have an outbreak in the winter, like another wave of COVID, and that's something that they're concerned about and paying attention to. That's actually the first time we've heard Jerome Powell mention that about a potential outbreak in the winter actually weighing on their potential decisions. Thought that was pretty interesting. Labor market scarring, not seeing that as a downside risk. Housing market, he says we monitor the housing market carefully, but because we don't have those low quality loans that we've had in 2007 and 8, sure, prices are going up and there's a concern with that, but the issue is not over leverage. The issue is strong demand and a lack of supply. And guess what his conclusion was? We want more housing builders to come and build more homes. That was his solution. He doesn't see bad loans and he does not see unsustainable prices. Unemployment. He says that there are many reasons why people aren't able to go back to work yet. Either they're still caring for their children haven't gone back to school yet. Some people are afraid of getting the virus. Some people are still getting the unemployment boost. And so all of these things will hopefully start correcting the labor market more once we get to, guess what? September and October. It's literally the same time frame we say all the time. Inflation. And remember, the September-October thing is just my deduction from what Jerome Powell says. Inflation. Somebody asked, why are you confident the Fed can get ahead of inflation? And this was really interesting because he breaks down, and I'm going to just keep this short, but he really breaks down, look, we only have 2 inflationary pressures right now. Number 1, base effects, which isn't even really inflation. Base effects are just, all we're doing is comparing to the whole of last year. Of course, numbers are going to be higher this year. So that's not a big deal, and it's certainly not long-term or persistent. Number 2, he says that bottlenecks are really the big thing pushing inflation right now, and bottlenecks don't last forever. In a capitalist environment, bottlenecks get solved. And this is why the Fed thinks it's extremely unlikely that we're going to see long-run persistent inflation despite us seeing inflation now. On recovery, this is where he says, look, we don't need to get all the way to our goals to start tapering, but we are a long way away from our goals, especially given the fact that we are still 8.5 million jobs short. On digital currency, he says he's engaged in getting digital currency right, but he's not concerned with digital currency replacing the use of the dollar. He gave this hypothetical of, hey, look, if you're a company, are you going to start transacting with other companies in a cryptocurrency, or are you still going to use the dollar, which has been working fine for a very long period of time? So, the question of this use for currency is still up in the air. Jerome Powell obviously is someone who believes that cryptocurrencies are a tool for speculating in the market, not really a good store of value and not really proven to be a good currency yet. So he's somewhat mixed on that, but just know his biases on that. Inflation. Obviously, inflation somebody asked the question like, look, and people are expecting there to be inflation. Isn't that bad with your expectations if you're worried about people's inflation expectations? Well, those are high, aren't they? And Jerome Powell goes, no, not really. The expectations that we're looking at are at the low ends of our expectations. And keep in mind, we want inflation to be 2%. We don't want it to be 1.7%. We want it to be 2%. But inflation readings are volatile, so there's no red line. On financial stability, he says there is some froth in stocks and in the capital markets, says that some asset prices are high, sees leverage in the financial system, but not at levels to where it's an issue, says that banks are well capitalized, that funding risks are low. There are some issues in money markets, but households overall are in very good shape. And overall, the main pillars of our financial system are very, very strong. And he actually expects downward pressure on rates going forward rather than upward pressure. Then he's asked, why are you not tapering? And he says, it's simple. We're not tapering because we have not yet reached substantial further progress, which he did give us a little bit more of a deep explanation on this in this breakdown. So there you have it. Now the best thing to do is check out the program link down below. Take advantage of that 39% off coupon code that expires on Cinco de Mayo. Folks, I cannot wait to have you in there. We go live every day the market is open, answer your questions, and talk about stocks, real estate, finances, you name it. Thanks. Bye.